In the early 1700s, Britain was deep in debt from constant wars. The government needed a way to manage this burden. Enter the South Sea Company, founded in 1711. It was granted a monopoly on trade with South America. The pitch was simple: invest now and reap the massive riches of the New World. The reality was far less glamorous. Spain controlled the ports in South America, and they weren't about to let a British company walk in and take the profits. The company's actual trading success was negligible, but in the world of high finance, perception often matters more than reality. By 1720, the company proposed a bold deal: they would take over the entire British national debt. In exchange, the government allowed them to issue new company shares to investors. It sounded like a win-win, but it triggered a frenzy that swept across London. Shares that cost £100 in January climbed to £1,000 by August. The fever was contagious. Everyone from aristocrats to common servants began dumping their life savings into the company, hoping to ride the wave of rising prices. Isaac Newton, the genius behind the laws of motion and gravity, wasn't immune. In the spring of 1720, he invested and sold his shares for a tidy profit of £7,000. He had beaten the market, but the story didn't end there. Watching his friends continue to make massive fortunes as prices kept soaring, Newton grew restless. The fear of missing out, or FOMO as we call it today, proved too strong. He jumped back into the market, buying more shares at the peak. By September 1720, the bubble began to leak. Investors realized the company had no real underlying business profit to justify the sky-high valuations. Panic set in. Everyone tried to sell at once, but there were no buyers left. The stock price plummeted from £1,000 to £150 in just a few weeks. The South Sea wealth evaporated into thin air. Many families who had mortgaged their homes to buy shares were left penniless overnight. Newton lost roughly £20,000, which is millions in today's terms. He was devastated. He famously remarked, "I can calculate the motion of heavenly bodies, but not the madness of people." It was a humbling moment for one of history's greatest minds. The aftermath was chaotic. The government passed the Bubble Act, strictly regulating how companies could be formed and shares issued. It took years for public trust in the stock market to recover, leaving a scar on the British economy. The South Sea Bubble teaches us that speculative manias aren't new. Whether it's 1720 or the digital age, human nature remains the same. When prices disconnect from actual value, a correction is inevitable. The lesson isn't about avoiding the market, it's about recognizing when excitement overrides data. Markets can remain irrational longer than you can remain solvent. The smartest people are just as prone to the allure of easy money as anyone else.